Was the collapse of Champlain Tower South covered by the association's insurance policy? Insurance expert Tim Klein, who has served all types of community associations for over 30 years, explains why he was so surprised about the recent decision made by the association's primary insurance carrier. Tim also unpacks why limitations exist and the types of property damage covered and not covered by the standard policy.
Those are exciting liability issues. So let's talk about the property issues, because those are really maybe where the rubber meets the road. We got some interesting news today, and that is that Great American, the carrier who's on the property portion of the policy, has made a business decision to pay $50 million to go ahead and walk away from their obligation contractually for that association. By paying policy limits on the liability side, that means there's no longer defense. On the property side, it just means that the carrier can take their checkbook and go home. And that's been a business decision that Great American has made, which is very, very unusual. But I suppose because of the notoriety of this particular event and the number of lives lost, that they just decided that they're going to pay them out anyway. They might as well get it done now and quash any future speculation about their handling of the loss. So that's the property coverage that the association maintains. In a common interest development, of course, an individual unit owner also maintains property insurance. They have contents, perhaps betterments and improvements inside of their home, and they have a coverage called loss of use, or if they're a landlord, a coverage called loss of rents. These are all within the definition of the building coverage or property coverage. So those are the exposures now that individual homeowners or their estate, if they perished, will be looking at in terms of coverage. The interesting thing is I wouldn't expect that Great American was going to pay the property claim. I was expecting to join this webinar this morning and talk to you about the collapse exclusion and how robust that exclusion is and how well-defined the various maladies that might cause the building to collapse would trigger coverage. I just didn't think that would happen. So that's a surprise. I'm not surprised by the fact that we will probably see the HO6 carriers be very, very stingy in terms of their handling of the property claims. I don't think they'll necessarily get their checkbook out quite as fast, but there will be claims made under those HO6 policies, and the HO6 policy has the same language that the master policy had, and that is there's generally exclusions for collapse, building collapse, or for inherent vice, poor building materials, or deterioration. And so we think those will probably all come into play in this particular loss. Very, very sad loss indeed. It's too early to sort out the HO6 part of it. What I do know is there may be, you may have 20 or 30 different insurance carriers, and they all respond differently in accordance with their coverage. One last coverage I'd like to talk about with regard to this loss is a coverage called loss assessment. There will be special assessments, and there may be a special assessment in this case to fund the defense. The board probably has a provision in the CC&Rs that requires the association to indemnify and hold the board harmless, and the association may be struggling to find ways to fund that defense. And that's because I think that the general liability carriers are going to pay policy limits, so they don't have to provide the defense either. So there may be the coverage, and that's about a $15 million limit, by the way. My understanding is there's a $15 million umbrella excess of a $1 million underlying. So if there's $700,000 in reserves, there may be a $15.3 million shortfall. If there is that much litigation that pursues this event, and it seems like it certainly could be that and more. So loss assessment coverage protects this unit owner against the special assessment the board may levy to cover these types of claims. There's a question whether or not they will cover any loss assessment portion of the loss directly related to the collapse. I think they'll pick up the liability portions of it. That is, if they special assess for the legal fees or the cost of defense, I do expect the loss assessment coverage to pick that up. What's interesting about loss assessment coverage is the date of loss is not the date that the event occurred. That is, not the date that the building collapsed. But the date of loss for a loss assessment claim is the date that the special assessment is determined to be necessary and activated. And that's an interesting issue. And of course, this claims had so much notoriety. There's no agent or broker who's going to write loss assessment coverage on a unit there after a loss like this. But in other circumstances, a fire or other kind of perils, we might see special assessments levied and those picked up under the HO6 policy. So that's a lot of material, but that's the property exposures that we've been looking at, and we'll continue to monitor as this kind of unfolds.
At Association Reserves, we make the present less stressful and the future more secure. If you want to join us in this mission, please like this video and subscribe to our channel. Leave a comment down below on what you'd like to see us address in a future video. Let's plan for your best future.